Hello everyone and welcome to our webinar. Today we're going to be going over Business Credit Decoded. The purpose of today is to decode business credit. If you're on this call and you're not really familiar with what business credit is, how it's built, the Business Credit Reporting Agency, business credit scores, that's exactly what we're going to dive into today. Now, I wanted to do this webinar today because I just returned from our credit boot camp where I did pretty much the same presentation and had outstanding response. Everybody loved it because they got a very good overview, soup to nuts per se, of the business credit building system. You get to learn what business credit is, the benefits. You also get to see how it's built and everything there is to know about the reporting agencies and scores. So before we jump in, we're going to get started because we have a lot to cover. I first want to introduce myself. My name is Ty Crandall. I'm actually the Director of Business Services here at CreditSuite. What my role is to do is this. I work with a lot of clients and help them understand business credit and offer business credit for their customers. And that's exactly one of the things you might want to keep in mind as you're going through this webinar. Yes, business credit gives you an amazing opportunity for your business. You could build a tremendous amount of credit without a credit check, without a personal guarantee, and take your business to a whole other level. At the same time, it opens up an opportunity for you to offer a much needed service to your customers who also can benefit from getting funding and business credit from their business and create a whole nother revenue stream for your company. So as you're going through this webinar, keep that in mind. Not only will this apply to you building business credit for your company, but it's also very applicable in helping you offer business credit as another revenue stream to your company and helping your customers access the much needed capital, credit, and financing they need to grow their business. So let's get started. First of all, let's talk a little bit about what business credit is. With business credit, we're talking about credit where the business builds its own credit profile and score. Now, this is very foreign to a lot of people. Obviously, most of you on the call are very familiar with the fact that you can build a consumer credit profile for yourself. You're familiar with this. You know you could start with nothing and you could get some credit and let that credit grow to a point where you can get mortgages and car loans and credit cards and even loans in your personal name. What most people don't realize is a business can do exactly the same thing. A business can also build credit and get credit cards, loans, mortgages, even auto loans in the business name, not the actual business owners. So with business credit, that's exactly what we're talking about. We're talking about a credit profile and score that is actually built in the business name attached to the actual EIN number that you have instead of just the actual Social Security number that you're used to. So again, with business credit, what you're ultimately doing is you're coming in and you are building credit under your EIN, not your Social Security number. Now, in doing so, what happens is that business can then qualify for credit cards, loans, lines. Again, everything that you're familiar with that you can use your consumer credit profile for, your business can do exactly the same thing. The business can get loans. The business can get credit lines. The business can get credit cards. The business itself can even qualify for real estate, commercial real estate, and even qualify for auto financing in the business name. Now, obviously, there's a tremendous amount of benefits that business credit provides. Being able to build a credit profile and score for your corporation instead of you individually gives you significantly more borrowing power and provides a ton of additional benefits. And one of those benefits is that you are literally creating a whole other separate credit profile than your personal credit profile. So what happens is you literally double your borrowing ability, because now not only do you have your consumer credit report and you have credit cards and loans and lines that you can use for any purpose, but on the other side you have the business report, and that business can now qualify for credit, loans, and lines and cards in its name. So you literally have double the borrowing ability. You can get a $2,000 Staples credit card in your consumer name. You could also turn around and get a $2,000 consumer credit card in your business name. So literally it gives you double the borrowing ability flexibility because you can use your personal credit as you always have, and you can also use your business credit to obtain credit at those exact same places that report on your consumer file and get even more money. Now, another benefit business credit provides is that business credit scores can be built much faster as they're only based on timely payments. Look, in the consumer credit world, credit scores are based on 5 main factors. They're based on your length of credit history. They're based on your available credit. They're based on your credit mix. They're based on your actual payments that you make, whether you make them on time. And they're based on your available credit. So there's 5 different factors that actually, or excuse me, I think I already mentioned that, your new inquiries or the new credit you're obtaining. So there's 5 total factors in the consumer world that affect your credit score. And because length of credit history and credit mix, those kind of factors are tough to control. So on average, it takes somebody years and years of well-disciplined borrowing before they're ever even in a position where they can have a good consumer credit score. But in the business world, this is radically different, because in the business world, all it takes for you to have a good score is a couple accounts that report on your report that you're paying on time. That's it. It's so simple. All you have to do is get some reports that report on your credit report, which we're going to show you how in a little bit. And as you pay those accounts on time, you're instantly rewarded with a good score. Because again, in the business world, that's all the score is based on. It's just based on how you pay your bills. If you pay your bills on time, then you're already going to have a good score. And as a result of having that good score, it's faster and easier for you to go in and start obtaining credit. Now, another benefit of business credit is that your approval limits per SBA themselves are 10 to 100 times higher on business accounts versus personal accounts. So earlier, I gave you an example of, hey, you can have double the borrowing power. You could have a $2,000 Staples card on your consumer report and $2,000 on your business report. Well, in reality, that's not how it would work out. If you had about a $2,000 Staples account on your consumer report, chances are very good that on the business side, you might have $3,000, $4,000, or $5,000 limits versus the small little $2,000 limit account you have on the consumer side. Guys, look, this is what draws people to business credit right here. One of the biggest benefits it provides is that your credit limits are significantly higher than in the consumer world. It is common for us to see store credit cards of $5,000 or $10,000. Think about that. Have you ever, or when's the last time you ever have seen customers with $5,000 and $10,000 credit limits at Target or Staples or Dell? Well, in the business world, it's very common to do so. In the business world, we see credit lines of $20,000, $50,000, $100,000 that are common, whereas in the consumer world, that kind of unsecured credit is very, very, very hard to come by. So the bottom line is, with business credit, you're typically looking at 10 to 100 times higher approval amounts and limits than you'll ever see on the consumer side, which is one of the biggest draws of why you'd want to consider building business credit. Now, at the same time, when business credit's done correctly, you could build it without a personal credit check. Stop. The minute you say no credit check in our society, it immediately breeds skepticism. So if you see this and go, wait a minute, man, you're telling me I can build credit with no credit check? That doesn't even sound right. But think of it like this. Have you ever been asked to pull your business credit report to get applied for a home loan or a car loan or a Chase credit card? Nobody's ever asked you to pull your business credit to qualify you for personal credit before. That's just weird. So why would somebody need to pull your personal credit if your business credit's built? The answer is simple. They don't. You see, many people go into a place like Staples, and Staples ask for the Social Security number, and they fill out their Social Security number on the application. Everybody does this. You know why? Because it has a spot for it. You've never even thought about filling out an application for credit and leaving your Social Security number blank. That doesn't even pop into your mind, because we live in a society where you're conditioned to believe that it's based on your personal credit. So when you see a block that says Social Security number, it's something that has to be there, right? You'd never even think of not including it because it's such a valuable aspect of getting you approved. But in reality, if you looked at that Staples application and you left that blank, you didn't fill in the Social Security number, what they would do is they would pull your business credit using your EIN number. And if your business credit was strong enough to stand on its own, you'd get approved. It's as simple as that. So the keys to getting approved with business credit and with no credit check are very simple. One, leave your Social Security number off the application. Second, build some credit to your EIN. Build your business credit, which is linked to your EIN. So when you go in and apply for that credit, they pull your EIN instead of your social and issue you business credit based on your business credit, not your personal credit. So absolutely, when business credit's done the right way, it can be built with no credit check. It's just as weird to pull your consumer credit profile when you're applying for business credit as it's weird that somebody would need to pull your business credit when you're applying for consumer credit. The bottom line, when your business credit's built, then your business credit can stand on its own and qualify for credit without needing the personal credit check. So when you do that and have just a little bit of business credit built, you can leave your social off the application and get approved without a credit check. Now, because there's no credit check, that also means there's no personal guarantee. Guys, this is one of the best parts of business credit right here. Most people don't realize that everything you do for your business, you're personally liable for. I just got done with a credit boot camp where I was surrounded by some brilliant-minded people. And one of the people ran a collection company. And she came to me after my presentation and said, "You know that's true. Listen, when we collect on business debt, first thing we do, we take all of their business assets. Second thing we do, we take all of their personal assets." She said, "It saddens me. It makes me sad, but it's the collection process." Guess what? That's the reality we all face. When you go out and you use your personal credit cards, your personal money, your personal signature for your business debts, if anything goes wrong in your business, they're going to take all of your business assets and they're going to come after your personal assets. Now, you don't get in business to fail. You might not even be thinking about that happening, but statistically, over 95% of businesses fail. So with those kind of statistics, you really can't ignore that it might not be the best idea to be personally liable for your business debts. With business credit, you're not liable. Your business is liable. So if your business ever defaults on that credit, they can come after the assets of your business, but they can never touch your personal assets. Your home, your car, your personal bank accounts are secured. They're protected because you didn't personally guarantee the debt. When you're building a business responsibly, it's really the only and best way to do it is to build your credit without being personally liable. It's only possible to do it one way, by building your business credit. Now, another benefit of building business credit is having established business credit increases your chances of approval limits, and rates and terms. One of our senior business advisor with our finance suite that helps all of our clients building business credit, she was one of the leading small business loan officers in the country for Wells Fargo. And as the leading business loan officer that helped those people secure business financing, she was never told and never knew that any applicant for business funding had a personal credit check or had a business credit check even done. Then she started training other loan officers. And when she got into a training position, she was shocked to realize that every person that applies for business credit cards, business funding, anything to do with their business in that bank, the first thing they do is pull your business credit report. Now, you might not know that, because in the consumer world, the law requires they disclose that to you. They have to send you that pretty letter stating why they turned you down and they looked at your personal credit and that you got turned down based on things in your personal credit. But they don't do that in the business world. They're not required to send that letter. So most people go in and apply for business financing and never even know that their business credit was pulled to look at to determine approval. But I promise you, when you go to get money for your business, whether it's credit cards or whether it's loans or credit lines, whatever it may be, one of the first steps that lender does, even when their front-end loan officers don't know it, is pull your business credit report. And what's on your business credit report, what your business credit scores are, the fact that you have it, business credit built versus not have it, will determine whether or not you're approved. It will determine how much you're approved for, and it will determine the terms that you receive on that money. The bottom line is, if you are a business owner that ever wants to get money in your business, if you don't have your business credit built, you stand a significantly less chance of getting approved. If you do get approved, you will get approved for less money at worse terms if you don't have your business credit built than if you do. Having your business credit built is the key to success with obtaining money for your business on top of getting the money on the best terms and the highest approval amounts. And at the same time, business credit saves businesses. The statistic is crazy. Over 90% of businesses fail within their first 5 years in business. And per SBA, most of those businesses go out of business because of a lack of capital. They can't get the money they need. Okay, and at the exact same time, statistically, 89% of people that go to a bank to get money get denied. Ladies and gentlemen, there's a direct link in the fact that 89% of business applicants go to their bank and get denied, which results in 90% of small businesses closing their doors. Businesses close their doors because they can't get money. Your average business starts this way. It starts with an idea, and the business owner uses their personal credit cards, their personal funds, money from friends, family, or investors to get that business started. And that's exactly how they continue to get money. They continue to use their personal credit cards, their own money, their friends' money, their family's money, or if they're lucky, investors' money to try to build their business. The problem is most of those owners get capped. They hit a wall. They get to a point where they've maxed out their credit cards. They've put in all the money they have to give. They've milked their family and friends for all the money that they have to give. And then an emergency comes up and that business is out of business. The bottom line is, if you have a $5,000 emergency tomorrow, it ain't that big of a deal if you got a $50,000 business credit card just sitting there that you can use for any reason. There's really nothing that's that big of a deal when you have the funds to pull you through your growing period and your emergency situations which will almost always arise in growing a business. So the bottom line is, business credit saves businesses. Having business credit gives you the ability to get the money you need at the best terms, okay, at the best rates, at the best everything, so you can continue to grow and thrive your business based on the money that you're actually borrowing from other sources. And that's what this is all about. If you look at a company like Walmart, 80% of the cash injection that goes into Walmart comes from business credit, not shareholders, not investors. All the other money that could pour into that, 80% of the total money that goes in comes from business credit, because your high-end, big, successful companies understand one simple thing. You get rich on other people's dime, not your own. The key to success is to build your business using other people's money. And if you're successful in doing that, you could build a massive, massive operation, significantly bigger and more successful than if you're trying to do it based on your own personal funds. So let's talk about the business credit reporting agencies. There's 3 of them. Dun & Bradstreet, Equifax, and Experian. Now, most of you are familiar with Equifax and Experian because they're big players in the consumer world. So you've heard of them before. You've probably pulled reports for them before. Some people aren't familiar with Dun & Bradstreet, but you should be familiar with Dun & Bradstreet. They are 10 times bigger than the next business reporting agency. The bottom line is Dun & Bradstreet rules the roost with business credit. So if you're going to build a business credit profile and a score and start getting credit, you need to become familiar with D&B, because they're the primary source that those people that you're trying to build credit with are pulling to determine your approval or denial. Okay, Equifax and Experian are also in the business credit building space. Experian is a distant second in business credit than Dun & Bradstreet, while Equifax is a very, 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 very small presence in business credit. Okay, so when it comes to business building and business credit building and obtaining and selling of business data, Equifax is a very small player. Experian's a okay player, and D&B is just by far bigger than the other 3. So let's jump in and talk a little bit more about D&B. D&B is the biggest and major business credit reporting agency. Dun & Bradstreet today has 206 million records on file. 206 million. The next closest business credit reporting agency to that is Experian, that has 27 million records. Wow, big difference. So Experian has 27 million records, while D&B has over 200 million records. 10 times the amount of records on file that Experian has. So they are by far the biggest. And because they are by far the biggest, they're the most commonly used. When you go into a bank, when you go to apply for something, although some do pull Experian and Equifax, it's D&B that most businesses get their data from, because D&B is by far the biggest in this space. Now, they're a publicly traded company. They actually trade on the New York Stock Exchange under the ticker DNB, and their headquarters is in Short Hills, New Jersey. Now, first of all, you might go, well, duh, of course they're in the United States. Ladies and gentlemen, Experian isn't. Okay, a lot of people don't realize that even the consumer bureaus are not all in the United States. Some of them even trade on the other stock exchanges other than ours. They're not even headquarters in the United States. DNB is one. DNB is in the United States. They're actually out of Short Hills, New Jersey. Now, that's a big deal, because the majority of records DNB has don't even come from North America. They come from Europe. So if you look at a breakdown, and sometimes I'll show this on my webinar, of all of the records that DNB holds, you'll see that Europe is by far the biggest collection of data they have. North America is second, and I think Asia comes in third, and then there's some smaller areas beyond that. But DNB is headquarters right here out of the United States and absolutely trades on the New York Stock Exchange. Now, why this is a big deal? Well, might get a little off topic, but I'm going to tell you a little secret. There's another company that popped up a few years back, 3 years ago, and their name is Dun & Bradstreet Business Credibility. You might have even been called by them, and they tried to sell you credit monitoring or some other kind of product. DNB Credibility is not DNB. Okay, so it's important to know that. You can do a little bit more research, jump into that. I've even done webinars on my YouTube channel where I talk about the difference between DNB Credibility and Dun & Bradstreet. But the bottom line is, DNB is a publicly traded company. DNB Credibility is actually a privately owned company, so big differences. But DNB themselves, they are right here in Short Hills, New Jersey, in the United States, even though North America is the second biggest source of records they have. And again, they are a publicly traded company, as their sister company, DNB Credibility, isn't. So the DUNS number is a 9-digit number issued by DNB and issued to every business location in the DNB database. Look, here's the deal. When DNB knows you exist, they give you a DUNS number. That's how they list you. That's their own identifying number in their database. They don't have any records in their database that don't have an assigned DUNS number. So, what is the DUNS number? Well, the DUNS number is actually a 9-digit number issued by DNB that works kind of like an EIN for the world. So, you're familiar with an EIN. I hope you're familiar with an EIN. Your EIN is like your social security number for your business. It's your identifying number where the IRS and our government can label your corporation. So when you have a social security number in the United States, everybody can know your credit. It's linked to your social. Your social is your social. Well, your EIN is your business's EIN. Okay, every business has one EIN, and it's your identifying number to our government. It's what lets them know that that is your corporation. Well, the DUNS number is the same thing for the world, meaning somebody in Australia could look at a DUNS number and know exactly what it means. They know that's the identifier for your business, the same as people in America know that. This is used everywhere across the globe for any business in DNB's database. As a matter of fact, there are more than 50 global industry and trade associations that recognize, recommend, or require the DUNS number, and so do a lot of the foreign governments. The European Commission, the U.S. and Australian government, even the United Nations requires the DUNS number for every contractor that works for them. So let's say the UN is in town, and you get a job in New York doing some work for the government to get ready for the UN to come in. Well, what happens is you are required to have a DUNS number. They would make you as a contractor get a DUNS number to even work for them. So if you're an employee of the U.S. government, if they hire your company to do whatever they may hire your company to do, they require your business have a DUNS number before you can even work for these kind of organizations and governments. So it's widely used across the globe as the identifier for your business. Now, Dun & Bradstreet has a credit score known as the Paydex credit score. And as you might imagine, since Dun & Bradstreet is the biggest player in the business credit world, the Paydex score is the biggest, most commonly used credit score in the business world. Bottom line, okay? So Paydex is something you should and will become very familiar with, because even though Equifax and Experian have their own credit scores, it's the Paydex score that's the most commonly and widely used score in existence today. Now, the Paydex score goes from 0 to 100, with 100 being the highest score you can obtain. Okay, very simple. Now, it's important to note here that we're about ready to jump in and decode business credit scores. I am going to go over the main score available from each reporting agency, but you need to keep in mind, each agency actually has multiple scores they provide. So for example, Dun & Bradstreet also offers a supplier index score that lists the risk of suppliers. They have another score that just has to do with your risk of filing bankruptcy in the next 12 months for your business. So there are multiple scores that each bureau provides. I'm telling you this because if you ever look at a Dun & Bradstreet, Equifax, or Experian business report, it's very common to see 2, 3, or 4 scores on that report, not just one, each score indicating a different thing. But the Paydex score is the major score, not just with D&B, but of everything to do with business, and it is the one that everybody will look at when you're applying for credit with Dun & Bradstreet. So if somebody pulls your Dun & Bradstreet credit to look at it, they're mostly concerned with your Paydex score. That reflects your overall risk of default. So let's take a look at a comparison. On the consumer credit scoring world, I told you about this just a minute ago. 35% of your credit score is based on payment history, 30% spent on utilization. The length of credit history is 15%, while the accumulation of new credit and credit mix each account for 10% of your total score. It's confusing. Are you confused already? Okay, the bottom line is it's tough to consume. It's tough to build a strong consumer score because you have so many different variables that affect different aspects of the score. And in order to have a good score, you have to have all of this be good. You have to have the right credit mix of car loans, credit cards, auto loans. You have to not be applying for a lot of credit too quickly. You have to be in the bureau for many years. You have to have good utilization, which means your loans and your credit card limits are a fraction of what your balances are a fraction of what your limits are. And you have to pay your bills on time. If you do all of these things, you have a good score. Well, it's tough for a lot of people to do all these things, which again is why it takes your average person years of well-disciplined borrowing to even be able to build a solid credit score. Now let's look in the business world. Again, the business score is only based on how you pay your bills on time. There you go. That's your business credit score right there. Now I have another slide that I sometimes show, slides plural, that breaks this down to a particular number. I can tell you if your score is 81 or 82 or 83 exactly how many days early or late you pay your bill. So if you pay your bill 30 days late, then you're going to have about a 50 business credit score. Now literally I could tell you that, if your score was 51, then that means that you pay your bills 29 days late, so on and so on. So this score literally reflects exactly how early or late you pay your bills. But the one commonality here is that no matter what your score is, it indicates how you pay your bill. Do you pay on time? Great. You have an 80 Paydex score. Do you pay early before the discount period? Great. Then you have a 90 Paydex score. Do you get the bill and pay it the minute you receive it on all of your bills? Great. Now you have 100. You don't need a 100 score. In the business world, you only need an 80 score or higher to have good credit, which only means you pay your bills on time. So if you pay your bills on time or early in the business world, the business bills that report to the business credit reporting agencies, you're immediately rewarded with a good score. And if you pay your bills late, how low your score goes depends on how late you pay your bills. Now, keep in mind, the key here is to have credit. Sometimes people come to me and say, hey, Ty, look, I've got this business credit bill I paid late. As a result, my score is 40. How do I fix that? Well, first of all, you start paying it on time. And second of all, you get more credit that reports you paid as agreed, and it's going to bring up your average overall score. All you have to do to have good credit is have accounts that report and pay them on time. If you do those things, you're rewarded with a great business credit score in the business world, especially with D&B and their Paydex score. Now, keep in mind, there's a big difference between consumer and business credit scores. Business credit scores, well, the business credit score is a mathematical model that's used to depict a business's risk of going 90 days late on an account within the next 12 months. A consumer credit score is a mathematical model that's used to depict a consumer's risk of going 90 days late on an account within the next 24 months. Two big differences in what I just said. Obviously, with business credit, it's based on the business's risk of going late. On the consumer credit score, it's based on the consumer's risk of going late. But the biggest difference is in the business credit scoring world, that score depicts the risk of the business going late in the next year. In the consumer credit scoring world, the consumer credit score depicts the risk of that consumer going late in the next 2 years. One of the biggest fundamental differences between business credit and personal credit scores. So let's talk a little bit about Experian. A lot of people don't know that Experian was formerly a division of TRW, an automotive electronics giant, back in 1901. They are the oldest of the consumer credit reporting. Actually, no, they're not. I think Equifax is a little older. Equifax was created in 1898. Okay, Experian has an interesting history of becoming TRW and going through the whole, array of what they went through to become who they are today. Experian is the second biggest player in the business world. Okay, you're going to deal with them a lot. They're very common. A lot of people pull Experian. A lot of creditors report to Experian. So if you're going to build business credit, you need to become very familiar with D&B. You also need to become very familiar with Experian. Now, Experian has a credit score known as IntelliScore. Actually, as of 2008, they now call this IntelliScore Plus, and that is their actual credit scoring model. And just like with Dun & Bradstreet, it ranges from 0 to 100 points. So all three of the main business credit scores that we're going to talk about range from this 0 to 100 point range, with 100 being the highest. But IntelliScore has some very big fundamental differences. The biggest difference with IntelliScore is the 0 to 100 is a percentile score that reflects the percentage of businesses that score higher or lower than that specific business being looked at. Let me expand. I just told you about the Paydex score. How you pay your bill determines your score. If you pay on time, you have an 80. If you pay late, your score goes down. Well, in Experian's world, if you have an 80 score, all that means is that you score higher than 79.9% of other businesses. It also means that there are 20% of other businesses that score better than you do. So wherever you fall from 0 to 100, what it reflects is the actual percent of other businesses in their database that have a better or worse score. So again, if your score was 90, that means there's only 10% of businesses in Experian's database that score higher, while there's about 89.9% of other businesses that have worse scores than you do. So a big difference. Even though Experian does go from 0 to 100, it's based on a percentile score versus being based on exactly how you pay. And also, IntelliScore takes into account a lot of different factors to come up with that percentile. Okay, much like the consumer credit score takes into account all those different factors, utilization, payment history, IntelliScore also takes into account a lot of those factors, unlike Paydex. So you can have a score 0 to 100, but don't think it's just like Paydex. It's not. IntelliScore Plus takes a lot of factors into account to determine that score, and ultimately the score literally reflects how many other businesses in their database you score better or worse than. Let's talk about Equifax. 1898, okay, actually founded by Catter and Guy Wolford, way before the creation of TransUnion. Was when Equifax was formed. And Catter actually got the idea from his grocery business. Most people don't know this. And I bring it up because I'm a history buff. I like history. Okay, when it comes to credit reporting agencies, consumer and business, God, they all have very, very interesting history. Matter of fact, I think that might be my next webinar is the history of the reporting agencies. But one thing I'll tell you is this. This right here is where business credit reporting started. It started right here. What happened was this guy had a grocery store, and people wanted him to, his customers wanted that credit with him. Well, what he started doing was gathering information on these customers, everything he could find. Were they married? Were they divorced? What were their spending habits? All the data he could get, he collected to determine the terms and whether or not he was going to issue credit to the customer and the terms he was. Well, it worked well for his business, very well. He did well with it. His customers liked it. So then all of a sudden he started talking to his buddies about it. And his buddies said, man, that could help my business too. Will you sell me that data? Will you sell me the data on your customers so I'll know if they're good customers to issue credit to for my upholstery business, for example? And that was how credit reporting started. So right here, Equifax was the first credit reporting agency, period. And that's exactly how it started in the personal world, is they came out and they started gathering this information from his grocery business. Other companies or businesses around him said, we need that data. He started selling the data and realized, I got a business model here, and the credit bureaus were formed. Now, Equifax has something called the credit risk score. It's their main business credit score in the business world. It also ranges from 0 to 100, with the lower score indicating a higher risk of serious delinquency. But unlike IntelliScore and more like Dun & Bradstreet's credit score, with Equifax, again, it has to do with how you pay your bills. You pay your bills on time, you have a good score. You pay your bills late, you have a low score. So unlike with the other reporting agency, or with, unlike with Experian, it's not based on an it's not based on a percentile score. Equifax and D&B are both the same, ranging from the 0 to 100 range, okay, with the score reflecting how that business pays its bills. So let's talk a little bit about business credit building, and let's stop here and take a breath and see what we've covered in the last 40 minutes or so. The first thing you know is you now know what business credit is. You know the benefits it provides. You have at least a background understanding of the 3 business credit reporting agencies, and you now have a basic understanding of their credit scores and how the credit scores work with each reporting agency. So now let's talk about what you would do with this information to start building your actual business credit. Well, a business starts building a brand new credit profile much the same as a consumer report does. Think about it. When you first built your consumer credit report, how did it start? You had nothing linked to your social security number. Then you went and got some credit. Some people got it because somebody co-signed for you for a loan. Some people got it because you went out and got some low limit or secured credit card. Well, that's exactly how things start in the business credit world. Just like in the consumer world, you start with no credit profile and score. You build a little bit of credit that reports to the business credit reporting agencies. You now have trade lines. You have a profile. You have a score. And with that profile, score, and trade lines, you can now qualify for more credit. As you get more credit and you use the credit, you keep getting approved for higher limits, and you keep being able to get approved for more and more and more credit. I just described to you the exact process to build consumer and business credit. You start with nothing. You get approved with some creditors that report to the reporting agencies. You use that credit. You pay your bill. The fact that you paid the bill is then reported to the business credit reporting agencies. You now have a credit profile with trade lines, a credit score, and you can use that profile and score to start getting approved for more and more credit. Fundamentally, nothing is done different in the consumer and the business credit world. But one of the first things that is different is in the business credit world, these starter accounts to get you going are called vendor accounts, Whereas in the consumer world, most of those starter accounts are secured credit cards. So I'm going to talk about that in a minute. But before I do, let me talk to you about the very first step of building business credit. Before applying for business credit, you must ensure that you meet or exceed all lenders' credibility standards. I have a lot of people that come to me and say, Ty, I tried to build business credit and I failed. And they failed because of step one. They never made sure their business was set up credibly in the lender's eyes before they started applying. See, here's the secret, okay? When you apply with Staples or Dell or Apple for credit for your business, they don't know who you are. They don't know if you're a one-man shop working from home or whether you're a 20-employee company that they want to give tremendous amounts of credit for. So to try to figure this out, they dissect your application looking for many things that in their mind can help them determine how big and how credible your company is. If you have the persona that you're a really big, credible company, you get approved for more money, significantly more money, than if you were to come in and apply and them see you as a one-man shop working from home where they might not approve you for anything. It all comes down to building business credibility. If you're successful in this first step, it lays a smooth path ahead for you to be able to build your business credit. So there's over 20 things that really tie into business credibility. And in our finance suite, for your customers, for you, we go through all these 20 points. We even have advisors that work through this with you, making it real easy to make sure that you meet these credibility standards. But today we're going to go over some of these as we have time to do. Okay, so legal business name including DBA. Look, when you apply for credit, you need to always apply under the exact same name. Your bank statements, your utility statements, your corporation papers, everything needs to read exactly the same. Look, there is a difference between ABC Company, ABC Company Incorporated, and ABC Company Incorporated doing business as business managers experts. There's a difference between all three of those that I just said. You need to make sure that everything in your business has the exact same name, including DBA, your corporation papers, your bank statements, your utility statements, and when you apply for credit, you need to make sure that you're using that exact same legal name. Let me tell you why I tell you this. I was telling you earlier about Megan Christensen. Megan is our senior business advisor that helps our clients build business credit. When she was at Wells Fargo, right here was one of the biggest reasons that they turned down customers. The customers, when they applied their corporation name, they couldn't find it. They went and looked in 411. They went and looked in D&B's database. They couldn't find it. In a lot of cases, because the company, when they applied, they didn't put their DBA. They didn't put their full legal name. Well, let me tell you what happens. The bank just denies the application. They don't go looking, digging, trying to find your company name. Your company name needs to be the same on all your docs and when you apply for business credit so they can find you, and it gives you the best chance of getting approved. Now, you also need to have an EIN registered. Really, before you're even given a bank account for your business, they won't do that unless you have an EIN number. So you need to go in, you need to get an EIN number, you need to register it with the IRS so the government knows about your company. If you don't have an EIN number on your application, you will not get approved for business credit. And obviously, you will not look like a credible business. Your business address needs to be a real physical business address. You cannot use a P.O. box. You can't use a UPS box. You can't use a home address on your application to apply for business credit or you'll get denied. Okay, now a lot of people come up and go, hey, Ty, I got a UPS address. Nobody knows. It's not a P.O. box. It looks like a regular address. Come on. Look, ladies and gentlemen, we've got technology in our finance suite. We'll tell you exactly if it's a real address or not. We'll tell you if it's a P.O. box. We'll tell you if it's a business address. Lenders use the exact same credibility checks. They have the technology where they check to see if you're applying for a home address, UPS address, P.O. box, or real business address. And if you are applying for a home address, you're probably not going to get approved for money. If you're applying with an address on a big high-rise building in Tampa, Florida, you're probably going to get approved for money and even more money than you would if you were looking at like in some small shop. Now, if you're not working from a big office now and you work from home, don't worry about it. There are things like virtual address solutions provided by companies like Regus.com, Regus is R-E-G-U-S, where you can buy a mailbox from them. You rent it. So you pay them X amount of dollars. They give you an address you could use. You can get all of your mail forwarded to that address, and then when somebody pulls your address, it looks like you're in some big major corporate building, which helps give you the persona of being a big company even when you're not. So you don't really have to have a big physical address and move your office. You can get a virtual address, use that address on your applications, giving the perception that you're much bigger than what you may be. You have to be listed with 411. The two basic components of building business credit, you need an EIN, you got to be listed with 411. And not being listed with 411 is one of the biggest reasons people don't get approved for business credit. When I went to start building business credit, I was blown away that after my company had been open for 4 years that we were never listed with 411. It blew my mind. Most people don't even know if they're listed with 411. Some people, one person asked me at our boot camp, what is 411? Your business has to be listed in 411. They're going to pull that 411 listing to make sure that your business is even listed. Okay, and 411 is like an online business directory. You can look it up when we're done with this webinar and find a ton of information about it. Your phone number has to be listed with 411 for you to be perceived as credible. You need to have a good business phone number and a fax number. A big business has a fax number. A big business has a toll-free number. That's what you want to do. We live in a society where you can go to ringcentral.com or go to RingCentral and you can pay $9.99 a month, less than $10 for a phone number and fax number and toll-free number all combined. So it's very easy and very cheap to get a toll-free number and fax number. You should have them. Lenders really look at this to see if you're credible or not. Website and email address. You need a professional website, professional email address. You might look at this as a no-brainer like I did. Then I found out that over 50% of small businesses don't even have a website, and that blew my mind. So more than half of small businesses don't even have a website. You have to have one. You can go to GoDaddy.com, $100. You can go to sites like odesk.com and hire somebody. There's a lot of ways you could get a very cheap website, if not a very good website, but you need to have a website. You need to have a professional email address. I always use the same example here. You can't go apply for funding with an email address partychick2009@yahoo.com. You're probably not going to get approved for money if that's your email address, right? So you need a professional email address. My email address is ty@creditsuite.com. That's a professional email address. It's linked to our domain. You can go to creditsuite.com and see our website. You can email me, ty@creditsuite.com. Nowadays, you can go to GoDaddy and pay them less than $8 and get a website domain and get an email address. Bank account. A lot of people don't know that a lot of creditors look at your bank account open date as the date your corporation started. You need to open your bank account. You need to have some longevity with it. And you also need to make sure that your name is the same on that bank account as all your other legal documents. You also need to make sure you have the proper licensing. If you're in an area or a field where you have to be licensed, you have to be bonded, you need to get that stuff done. The lenders know whether or not you're supposed to be licensed, for example. And if you're going in as an unregistered or unlicensed contractor, for example, trying to get money, you're not going to get approved. You've got to make sure that you have the proper licensing for your business. Now, if you've done these things, now you've set up your business credibly. Now you've created the perception on the application that you want the lenders to see. You've structured your business to look exactly like you want that creditor issuing credit to look at or to look like. The next step is you need to get access to your business credit reports. You can go online and type in business credit report, Experian, Dun & Bradstreet, or Equifax and easily figure out who had or how to get these business credit reports. They range from $39 to $69 a month. You do not need to get credit monitoring with all of them. Okay, you should just consider getting it, for example, with Dun & Bradstreet. Okay, because everybody pulls them. But you should be monitoring your business credit reports as you build your credit. You need to see the trade lines being added. You need to see when your score is established what your score is. So it's important that you get set up with the business credit reports. Now, if you're selling something like our Business Finance Suite, it's a turnkey system, okay? So it's all done for you. We walk the customer through the 20-point credibility check. We give them access to free Experian Smart Business data so they don't have to pay for that. But if you're not using our Finance Suite to build business credit for yourself or for customers, you've got to come in here and get set up with at least one of these bureaus so you can monitor your business credit as it's being built. Then the next thing you're going to want to do is get your vendor account set up. So What are vendor accounts? Well, vendor accounts are the accounts that you initially get started with building business credit. Right here is the most important aspect of building business credit. It's where everybody gets stuck. You see, most people don't know where to go to get approved for business credit initially. And again, you can go to my YouTube channel and you can find webinars that we've done where we've gone through and I've shown you the finance suite, show you a lot of vendors you can initially get approved for. Some of them are Lachlan and Associates, Monopolize Your Marketplace are two good ones, Quill, Uline. I just mentioned four right off the top of my head that are very good, very basic starter accounts. Lachlan and Associates, Monopolize Your Marketplace, Uline, and even Granger is another very good one that you could use to initially build your business credit. I just gave you 5. So you got to go to these kind of companies. For example, you can't go to Staples to build your business credit initially. If you go to Staples with no consumer credit built, they won't approve you for credit. If you go to Staples with no business credit built, they won't approve you for credit. You got to have a little bit of credit, trade lines, profile, and score established, then Staples will give you credit on the consumer and the business side. So those companies that I just mentioned are some that will give you initial credit. You can get credit with them. Again, you buy their stuff, you pay it as agreed, they report to the business credit reporting agencies, and then you have your initial trade lines built. Now, these initial accounts will be vendor accounts, and vendor accounts usually have terms like net 30 terms. So that means you can't, these aren't revolving, you could just use them and have months and months to pay it back. If you buy $10 at Uline, you need to pay that $10 back within 30 days. When you pay that $10 back, they report to the business credit reporting agencies. You have a trade line, you have a profile, you have a score. Now you're able to come in and start getting business credit. So when you have 5 of those vendor kind of accounts, then you can start moving to revolving credit, which you're used to. Credit cards you could use for any, for whatever reason, and then, you don't have to pay it back. You only pay a minimum payment. But in order to get to that level, you got to initially build about 5 of these vendor accounts. And remember, do not use your social security number. Okay, you only use your EIN, you get approved, you pay the bills, then those accounts report, then you have trade lines, profile, and score, then you can start getting approved for revolving credit. And also keep in mind, it'll take 30 to 90 days after you pay that bill for your initial business credit accounts to report. Okay, so it might take a month, might take up to 3 months. Keep that in mind while building your initial vendor credit. Now, also remember that you want to next obtain the revolving accounts. This isn't really something to remember. This is just the reward. I mean, once you've built 5 vendor net 30 accounts, the next thing you could do is come in and start getting revolving credit. With stores, you're going to start with store credit. Staples, Dell, Apple, Home Depot, Lowe's, Target, Walmart. Every one of those, Best Buy, BP, Shell, all of those, Costco, Sam's Club, every single one of those accounts I just mentioned, those companies will issue you credit in your business name if you have credit built with your EIN. So if you built 5 initial trade lines linked to your EIN, now you can apply for all of those stores, leave your social security number off the application, and start getting approved for credit with them because they see you have a profile, a good score, trade lines, so they'll all start issuing you. Again, it's going to start with stores. Then you're going to move on to Visa, MasterCard, Discover, American Express. It only takes about 6 months total. Let me give you a time frame. You can start getting vendor accounts immediately. They report in 30 to 90 days. Then you can come in and get revolving accounts about 90 days total time in. And it takes you about 6 months total time to start getting $5,000, $10,000 limit Visa, MasterCard, Discover, American Express cards. So I just laid out the path for you in 6 months to get $5,000, $10,000 limit credit cards that are Visa, Discover, Amex cards you could use anywhere. It's as simple as getting the 5 vendor accounts. Once they report, then you come in, you get about 5 more revolving accounts. Then in a total of about 6 months, you're able to get Visa, MasterCard, Discover, Amex cards you can use anywhere. Now, once you've done that, you want to just continue using the credit. Continue applying for more and more and more credit. The more credit you use, the more credit you apply for, the higher the limits are. So you might start with $5,000 limits. Then you go get a Dell card. They give you $8,000 limit. Now you get to get another Visa card. Well, Visa gives you $10,000 because you've shown that you could manage an $8,000 limit, and so on and so on. And these credit limit accounts will grow to 20, 30, 50, 60. I've even seen a $120,000 business credit account that was built by a well-established business that had spent about a year and a half building their business credit. So that is the goal, to get your credit good enough where you can get high limit credit lines you can use for any name in your business name with no personal guarantee. It's a very obtainable goal within 6 months as long as you followed the steps that I outlined in this webinar. And once you built the 5 vendor accounts, then built the 5 revolving accounts, as long as you continue building the credit, you'll get to very, very high limit credit cards. So that's it. We went through a lot today. Business credit, the benefits. We talked about the reporting agencies, the scores. We talked about step-by-step how you build business credit along the way. If there's anything else I can help you with relating to business credit, give me a call or send me an email. My email is ty@creditsuite.com. I have it pulled up on the screen right now. My phone number is 877-600-2487. My goal is to help you be successful offering business credit for your customers. So if you're at all interested in offering business credit for your customers, feel free to send me an email too, ty@creditsuite.com. I'll send you some information on our system, the Business Finance Suite, which is a turnkey system that it's just easy. You just sell it, and then our advising team takes the system and works with the client one-on-one to help them build their business credit and obtain financing. It's cool because you can make a lot of money while offering business credit for your customers without doing any of the work. Our team does it all. So if you're interested in that, let me know. But if you have any other questions that I can help with relating to building your business credit, feel free to give me a call or send me an email. I hope you got a lot out of this webinar. I'm getting ready to jump into another one. So if you do have any other questions, send me an email or give me a call and let me know. And again, I'd like to take this opportunity to thank everybody for taking the time to attend this webinar. Thanks, everybody. Have a great day.